Hey everyone, thanks for joining us. I'm seeing that people are joining right now, so we'll get started here. I've got with me Lucas Santana, Hashdex Research Analyst, and we'll be joined momentarily by our Head of Research, Pedro Lapenta, who should be on here any minute or so. And first of all, thanks for joining us to talk about the Bitcoin halving. It's obviously a very timely topic. We'll focus a lot of our energy today on how we think investors should be thinking about this event. And first of all, I should introduce myself first. I'm Jerry O'Shea, Head of Global Insights at Hashdex. And as I mentioned, Lucas is our research analyst. He's been very much focused on tracking these halvings over the years and is going to be sharing some of his insights along with, as I mentioned, our Head of Research, Pedro Lapenta. So just a little, two very quick administrative things. First, this webinar is for educational purposes only, and for any product-specific information, please refer to the appropriate prospectus. And I did want to mention upfront that I think we've got 45 minutes today, and so we'll aim to talk for about 30 minutes or so and save 15 minutes at the end for questions, but please feel free to submit questions throughout this discussion. I'll keep track of them here, and we can do that. So let's go ahead and get going. Then I think one of the things about Bitcoin, it obviously has supply characteristics that are really different from any other investable asset, and I think the halving events that really sits at the heart of that. There's obviously only ever going to be 21 million Bitcoin, and that doesn't happen by simply waving a magic wand. There's a process behind that, and so that a big part of that process is what we're here to talk about today, which is the halving. And I think investors in particular, given some of the events over the last week or so, are really thinking about, what is the price impact to Bitcoin from the upcoming halving. Lucas, I know, will share some of his thoughts on what's happened in the past and how that may inform the future. But to start, I think it probably makes sense to first level set in terms of what the halving is. There's still, this is the fourth halving that Bitcoin has gone through, probably the most impactful in terms of the amount of institutional interest, and with the approval of Bitcoin ETFs in particular. Halvings have become, this particular halving is generated more attention than others, but I think there's still a lot of bad information out there about what the halving is and what it isn't. So I want to start with Lucas, asking you just what is the halving and why does it matter?
Yeah, great question, Jerry. I think it's a good way to start the conversation. First of all, thanks for having me today, and I'm glad to see a bunch of people joining to hear more about this very special event for Bitcoin. And I think, well, zooming out and before talking about prices and what should be the impact of the halving, as you said, I think it's very important to understand what the event is and what it means for the network. So Bitcoin is, as you said, this very unique asset that has a maximum supply. And the way by which this supply is issued over time is also very interesting. So let me just bring real quick like a representation of what happens for the Bitcoin supply to be issued over time. So halving events are these scheduled events. So they are pre-programmed in the Bitcoin code. And they basically are events where the issuance of new Bitcoin is cut in half, and they are organized since the very first Bitcoin block, which is the Genesis block, mined by Satoshi Nakamoto in January 3rd, 2009. And they should happen every 210,000 blocks. So in 2012, we had the first halving. So originally from the Genesis block until this first halving, 50 Bitcoin were mined per block, were issued per block by Bitcoin miners. Then 4 years later, approximately, 25 Bitcoin were being mined per block. So they were halved. This new issuance was halved. And 4 years later, again, we saw this number go down to 12.5. And then in 2020, which is when the third halving took place, it decreased again in half. And this week, as you mentioned, we have the fourth halving, which will again decrease the issuance of new Bitcoin in 50%. And after maybe this Friday or Saturday, we should have only 3.125 Bitcoin being issued per block. And it's interesting to see that over time, what happens is that these events, they not only reduce the number of new Bitcoin that are being put into circulation by miners, which are the guys securing the Bitcoin network and registering transactions over time, but it's these events, they reassure this unique Bitcoin supply schedule, which, as we always say, is the same one since day one. Since the original code by Satoshi Nakamoto was released in 2009, this supply schedule has never changed. And this has very important implications for what the level of scarcity and rarity of new Bitcoin coming into the market. And one interesting thing is that even though we expect that the total 21 million Bitcoin will be mined by around the year 2140, it's interesting to say that anywhere between its sixth and seventh halving, we should have 99% of all the Bitcoin supply already issued. And between 2044 and 2048, we should have 99.9% already being issued. So not only we see that over time, less Bitcoin is being issued, but that almost all the supply for Bitcoin that will ever exist will have been issued by then, which is a very unique feature of Bitcoin. And when we actually compare Bitcoin, which is this new monetary asset and a competitor, not only to fiat currencies, but also gold, we say that that Bitcoin has this main thesis of being an emerging digital store of value. We see that, in fact, in the beginning, the rate of supply growth for Bitcoin was big because more coins were being issued. But as time went by and halvings took place, we started seeing the Bitcoin annual supply growth rate decreasing. And after this halving, it's interesting to see that Bitcoin will have the smallest supply growth rate among all of the currencies, or even gold. And it's interesting not only that this will take place after this halving, but also because of this very strict, immutable supply schedule for Bitcoin. Even if we don't know what will be the rates of supply growth for the dollar, for the euro, for gold in the coming years, we can very accurately estimate what should be the rate of growth of the Bitcoin supply 5 years from now, which is something, again, very unique of having these different monetary asset whose inflation rate, whose rate of supply growth is well known in advance and it's immutable. So I think the importance, as I said, for this upcoming halving is, again, to reassure this immutable monetary policy. And when it comes to comparing this against like the inflation rates for all the other monetary assets that we have in the world, fiat currencies and gold, Bitcoin would then, after this event, have the smallest one. So this, again, reassures these fundamental thesis of Bitcoin as an emerging digital store of value.
That's great. And I should say, too, the slides that Lucas is sharing are from a deck that the research team put together that's available on our website as of this morning, that goes into some more detail in the history of the halving and why it matters. And on that second point, Pedro, I want to loop you in here and talk a little bit about, and some of this Lucas touched upon, but if I'm an investor and maybe thinking about maybe making a first-time allocation to Bitcoin, and hearing about this halving event, how should I be thinking about it? Like, why does it matter? And would love your perspectives on that.
Sure. Thank you, Jerry. And I had a bit of a technical glitch here, but here we are. Well, it's a good question, and I think first and most, this event is a friendly reminder to all those who are starting with crypto and starting with Bitcoin, that this is in true, it's in fact a scarcity, probably the most scarce crypto or digital assets in general that like people have seen, right? So, and this event is a reminder that, you know, from time to time it gets more scarce, and it's happening, and we are into year 15, into the fourth halving cycle, and it's curious that, you know, people get reminded, you know, by the media in general, by investors in general, because it's an event known since the beginning. It shouldn't be taken into consideration a lot, but it still is, because people are interested in, and it's a reminder that, you know, there's been 19.8 million already issued, and there's only 1.2 remaining, and the system of the network is still working and continues to work, and it just reinforces the fact and reminds people again that, you know, this is a true scarce new asset that it's in play. Right. So from this perspective, I think it's really important for investors to get a hand on and to understand. A second point is that, although, you know, and we've been talking about it in our materials, in our research pieces that we've been putting out, you know, since, you know, we've been covering Bitcoin, that it does have, well, looking at the past, and it does have price impacts, right? Previous, like, few days or a few months before the halving, but also after the halving, and so far, when we look at the past, like 500 days, this is something that we've been we've been covering very closely. There is an uptick in price in the 500 days prior to the halving, and we've seen that in this fourth cycle again happening, right? But there's more to come, right? After the halving, and when people really realize that another halving has passed, less issues will come. Bitcoin is becoming scarcer and scarcer by the day, and then again, looking at the past 3 cycles, if history, you know, was to rhyme, we're going to see another, you know, tremendous uptick in prices coming up after the halving. So again, this is public information since the network was set up. It shouldn't affect, in my opinion, but it still is. It's because, you know, this is still in discovery mode asset. People are still understanding how it works, and once it reached, you know, like a critical mass or a much higher market cap, I don't think the halvings will have a tremendous impact, but it still does, right? So and if we're looking at, again, if we're looking at the past cycles, the first, the second, and the third halving cycles, and now the fourth, it's following, you know, previously seen patterns. So I mean, this is something that we're, you know, following very closely, and we expect this cycle to follow historical patterns, and you know, we should expect in the next 180 days to a year, whatever, but still, you know, a tremendous price appreciation to come.
One of the things I haven't seen discussed much is potential risks that may come with the halving or in halvings past. Lucas, so I know in the new research that's on our website, you guys look at some of those risks, and would love to get your thoughts around, again, if I'm an investor and looking at the halving happening in a couple days here, and then, you know, longer term, what are some of the risks that may be out there in terms of investing?
Yeah, that's a good one, because to understand what could be a potential risk, I think it's worthy to discuss a little bit how do halvings really impact what we call like the security of the Bitcoin network. And in fact, it's important to remember that the ones that provide security or register transactions immutably on the Bitcoin blockchain are miners, and they have essentially 2 types of revenue. The first one comes from newly issued Bitcoin, which are the ones they mined, and after halvings, they are cut in half every time a halving occurs. On top of that, we also have transaction fees. So essentially, if Jerry wants to transact on the Bitcoin network and I want to do it at the same time, if there's a lot of people trying to do the same thing at the same time, there's a constraint amount of information that can be registered in every 10 minutes, essentially. So I may want to pay some transaction fee to have some priority on top of that. And over time, these transaction fees have been rising. And this is also an important part of the revenue generated by miners. But during halvings, we see this issuance of new Bitcoin that is also part of the reward to miners being reduced in 50%. So that could make the less efficient miners to maybe shut down operations until the Bitcoin price readjusts as it did in the past, so that they become profitable again. This is not to say that all miners will shut down operations. Actually, yesterday I was in like a Twitter Spaces and I was listening to some miners saying that the guys that have these really big operations, they already prepared financially for these events. So this shouldn't be a problem. But still, historically, and particularly when the Bitcoin network was younger, like 2012, the first halving, we saw some dips in hash rate. But the good thing and the important thing to remark here is that these are very much short-lived. It could last anywhere between a few weeks to at most a month. And right after the halving, like if you wait 3-6 months, it should be more or less the same amount of security measured by the computational power of the network. And the most interesting thing is if you look forward to 12, 24, 36 months after each halving event, Bitcoin's computational power, the network's computational power, which is what assures its security, has risen by several orders of magnitude historically, including the past halving, which took place in 2020. We can see like the 12 to 24 months later, the hash rate, which is the computational power of the Bitcoin network, is already up by 100% or more, which is very a very good reassurance of the security level, and that even though we could see some small dips, this shouldn't last long because, as we always say, Bitcoin prices readjust eventually, and then we should see more incentives for miners to keep securing the network and increasing the security of the network. So I would say we could see some dips, and for this one specifically, we may not even see a dip because mining operations are very much professional, like these big warehouses mining Bitcoin today. So these guys should most likely be prepared for the event. And even if we see a dip, this shouldn't be a risk for the Bitcoin network, which, as we always say, is one of, perhaps it's the most secure computer network in the world. It's very difficult to attack it. I would say today it's very, it's almost impossible maybe to gather enough resources to attack the Bitcoin network and be successful. And of course, there is no incentive, economic incentive for you to want to attack the Bitcoin network. So long story short, I wouldn't expect this to be a major risk, even though historically we saw some small dips, but that shouldn't be a major risk. So in terms of security, what we expect is 12, 24 months from now, we should have maybe even higher hash rate and computational power for the Bitcoin network.
And let me add one thing to this comment, Lucas, and you pointed out that the mining industry has become very professional. If you compare it to 15, 14, 13 years ago when people mined Bitcoins, using their personal computers at home or even cell phones, right? Today, it's very much a professional endeavor, close to an industrial, facility, where the players are sophisticated, they plan ahead, and in their calculations, obviously, it's already embedded the fact that the mining, the issuance or the rewards, issued by the network is going to be halved. So in their planning and their business planning, their internal rate of returns, it's already considered that. And if you take into account what happened, for instance, in the past 18 months or so, and most vividly since Bitcoin mining ban in China, the hash rate has pretty much more than doubled, right? So that's the combined computational power of the network, and that in essence is in fact a halving for the miners, right? Because everything else constant, they would require, their rewards is already, if the hash rate of the network doubled, and if they're with the same equipment, the expected Bitcoin received, but is pretty much halved. So in essence, they already suffered a halving process in the past 18 months or so, but the combined hash power of the network continues to grow, right? So but these people are aware of it, and so since this has become very, very professional, this is already embedded into the projections, and I don't expect. We might expect, some adjustment in the short term. The more, and this can be compared to any commodities industry, right? Like there's a curve cost, right? And there's obviously the ones who can mine very cheaply, who have access to the better equipment and very cheap energy, to the other side of the spectrum, which are people mining with old equipment and having access to very expensive energy, right? So Bitcoin is pretty much, like a battery, of energy, right? So its cost, it's something to 60 to 90% energy. And these people are going to be pushed out of the market, but we're seeing a lot of new professional people coming in with new equipment. So I don't expect, as Luca just pointed out, major changes in the security of the network coming out in this cycle, especially as we are professionalizing much more and more. And also with the ETFs, that just came out, like that's coming, new inflow to the markets, and price appreciation expectations still continue. So just wanted to reinforce that point, Lucas.
Yeah, that's actually a good segue, Pedro, because I obviously do want to talk about the demand from the ETFs, because I think the toward the end of last year and even the early part of this year, we were talking about, with regards to Bitcoin's investment case, this sort of demand shock that was going to come from the ETFs, and then the supply shock from the halving. The demand shock, I think, ended up being greater than anyone anticipated, given the assets that have flown into those products. And my question is, I'm wondering, and I think others are as well, is the impact of the halving going to be less because of this demand? Is this really more about the demand in terms of the potential for Bitcoin's price appreciation? Is it really more about the demand coming from the ETFs and less about the halving?
Good question, Jerry. I think it's tough to separate the two, okay? Because timing wise, they're happening pretty much at this, like, very close at the same time. So, the ETFs approval in the US is something that happened in early January, and we are now into April, and we're seeing the halving occur now. But the whole, energy behind, the whole story behind the halving, is something that people have been talking about for the past 2-3 months already. So it's tough to separate the two, right? But I think part of the demand, like the strong demand we're seeing in ETFs, is driven by the fact that it's the halving is occurring simultaneously, right? You can't. This is just an opinion, and it's tough. As I said, it's tough to draw, like a direct causation, but it's something that it's in fact, I think it has been affected by the halving. But the other point is that it's like the U.S. market is obviously the largest market in the world, and it's been waiting for a Bitcoin institutional product for quite some time, and I think demand was there, and it was waiting for a product to come, and it's been very strong, and in fact, because when you boil down, you get into the details. We had seen obviously a huge product, which is called GBTC, right, losing almost, or even more, half of its Bitcoin, right? So that's showing outflows, but at the same time, all the other new products are gathering much more than this outflow, right? So it's showing a very interesting movement happening in the U.S. coming from institutional players that is way higher than what this GBTC product is seeing in outflow. So I mean, we've talked about this before, and we obviously were expecting a strong inflows coming in, but we didn't expect to be this big, and I think it also, you know, adds to the point that like the world is worried about the level of debt in major markets. The world is worried about the level of inflation in major currencies. We're just seeing an uptick again after like in the US, specifically in CPI in January, February, and March. People were thinking that, you know, CPI was heading back to 2%, but it's not. It's showing an uptick, and we're seeing, you know, Fed rates maybe not being cut again, but that's kind of compounds the problem with over leverage in these countries, right? Because you're going to have to be paying interest on a huge amount of debt that these countries have, and some people are arguing that we might be going through, you know, some problems, you know, like some more permanent problems in the fiscal side of these countries. And this is not only US, this is in Europe, this is in Japan, this is in major countries. And I think portfolios worldwide are looking for some form of protection for these events, or monetary debasement, as people call it, and also like CPI and Bitcoin, specifically Bitcoin, has seen, and when we put out an analysis on this, it's returned to discorrelation, right, to risky assets. And I think that's what, you know, a lot of people, a lot of investors are looking into it again as a discorrelated asset to major assets. And this should, you know, and if this is the case, it should have its space in most portfolios worldwide. So what we've seen so far is big in terms of demand, but I think it's still very in its early innings, and this takes time, right? You know, people needs to get used to it, to understand it, the risks, the rewards, you know, how it works. It needs to go through, you know, the like investment analyst needs to put together the thesis, take it through their committees, you know, their risk committees, their investment committees, their compliance committees, and this take time, and I think with all this backstop that I mentioned, and this correlation, I think Bitcoin demand is going to continue very strong in the coming quarters, on top of the halving, which has historically been a driver for demand.
I just wanted to add there that we keep tracking like this ratio between the average number of Bitcoins that gets into the ETFs in the US versus the amount of Bitcoin that is being issued on average every day. And it's interesting that today, I think this number is a little above, it's almost 3x. So for every 900 Bitcoin that is mined, there is roughly 2.7K Bitcoin that gets into the ETFs. And once the halving takes place, this multiple will double instantaneously. So this, of course, is an important metric to track, because after the halving, you're going to need twice as much time to get X amount of new Bitcoin into the market than you need today. So if we continue to see this very strong demand coming from these new ETFs, then we could actually see some price impacts after the issuance of new Bitcoin is cut in half later this week. And on top of that, I think the halving, we already mentioned this, but I think it's always interesting to stress that it has this awareness impact in the market. So if most people haven't heard about crypto, maybe after the halving takes place, it will be all over the news. And there is new people coming into the asset class exactly after this event. This has been registered historically. If you look for Google Trends, you will see that it's spiking right now, close to the event taking place. And I think this can also have a pretty significant impact in new users, new adoption coming from new users in the Bitcoin network. And as we always say, it doesn't really matter where adoption is coming from, if it's from retail institutional investors. If it grows over time, then with a maximum cap for the Bitcoin supply and with a decrease in issuance, this should impact prices over the long haul.
I think we're just about 30 minutes in, and we do have a handful of questions. So maybe if we can pivot to those. And actually, the first one, or call it maybe the last question for me, but I know, Pedro, you mentioned correlation earlier, and I know this isn't directly relating to the halving, but Lucas, you've been doing some research, or have done some research in the past few weeks around Bitcoin's correlation to other assets, particularly tech stocks. And I think just in terms of understanding the trajectory of where Bitcoin is going, I think that's helpful context. If you wouldn't mind maybe sharing some of your thinking around that and some of what you found.
Yeah, sure. That's a good one because after COVID, most people started realizing or saying that Bitcoin is basically a tech stock of sorts. It moves very much in tandem with tech stocks. For instance, you can take the Nasdaq 100 as a benchmark for that, and you see that after that period from March 2020 to late 2022, it indeed had very high correlations. But historically, if you zoom out and you take like the 10-year period from 2014 until today, what you're going to see is that this very high correlation environment was in fact taking place when we had the two monetary shocks following COVID. First one, quantitative easing in response to the COVID shock. And later on, when inflation in the US started getting almost close to double digits, we saw the fastest rate hike and quantitative tightening cycle starting and going and accelerating in recent history. So in these times, Bitcoin, in fact, was very much correlated, highly correlated with tech stocks. But if you extend this analysis from the beginning of last year until today, what you're going to see is that these correlations have come back to their old normal, as I said in a recently published article, which is to say that this role of Bitcoin as a portfolio diversifier, so having low correlations again, and this is also something that happens with gold. If you run the analysis, this portfolio diversification aspect of Bitcoin seems to be back, and it's very much still there. So we always say you should allocate to crypto, thinking of the long term, and if you extend this analysis long enough, then you see that these correlations are very mild. And since the beginning of 2023, even though you see Bitcoin, the Nasdaq 100, gold in all-time high territory right now, they haven't been very much correlated. So this diversification potential for Bitcoin is very much there.
Awesome. Yeah. And Pedro, I think we obviously were getting to the part of the webinar where price predictions always comes up, your favorite topic, but we do have some questions around prices and Bitcoin being on a 7-month green streak right now, coming off of low 20,000s in September or so. Where do you see prices going in kind of the medium to longer term?
This is the question, right? And we try to focus and we reinforce it over and over to our clients that investing in Bitcoin and in this new emerging asset class has to be a long-term endeavor, right? So and if you think that way, and if you think this is a technology, a new technology in the making, if you think this is something that's going to be around for hopefully forever, and it's on a uptrend of adoption, you should take the long term and invest into this technology and just wait. Given that we've been just now a strong ally, right, coming out of the lows in late 2000 and early 2022 after everything, early 2023, I'm sorry. And we've seen a strong price appreciation in the past 12 to 14 months. But coincidentally, as we were just speaking, we are into the halving and looking at previous cycles, and if again history serves anything for us as a guide, we should be seeing in the coming months still strong appreciation that's going to take Bitcoin above its all-time high and eventually doubling. This long-term price projection that Lucas is showing here, it's one of our guides that we look for price orientation, and this is a logarithmic regression that we do on the Bitcoin prices. A lot of people do this, but we made our own, and we have our own for Bitcoin and Ethereum as well, but this is for Bitcoin, And this regression, this yellow line, is kind of the average of what happened in this time window here that we're showing. And if we look at the blue line, it's still below the average trend, which is what we call the fair value trend. And I think over time, and again, that's why we reinforce this fact that you have to take the long view. And over time, I think, it's going to trend towards this yellow line. And if that happens, we're, and we might be seeing the next, 12 to 18 months. And according to the previous cycle, something in between $120,000, $160,000. If, history is here to help us, right? But again, this is still, understand asset class. People are still figuring out how to price these things. What we have is what happened in the past as well, and this is what, when we do this regression, and this is what points us into the future. And I think again, given that we are, again on the adoption curve, moving forward a lot, especially with the US ETF approval, I think there's a chance that we might follow this past pattern into this 12 to 18 month window that we're talking about. But again, this is just an opinion.
Yeah. And just adding to that, it's interesting that in all prior cycles, so history seems to be rhyming yet again. We have the halving, which in this chart is marked with these black stars. They always take place when Bitcoin price is below this yellow line. And after the halvings, eventually like 6 to 12 months later, prices accelerate upwards of this fair value trend, which is what we usually understand as more of the bubble phase of a crypto cycle, something like that, before we reach a new major top. But again, we are very much on track when we compare this to previous halvings. And it's interesting as well that when we look for like the excess returns in the same number of months before and after the halving, and we look for what should be the most interesting or relevant excess returns, in all prior cycles, in the windows of 12 and 18 months following the halvings, is when we see these excess returns being the strongest. So if history, again, of course, talking about the future is very difficult, but if history is a good indication of what we can expect, maybe not as big of a performance as we had in the past because of diminishing returns. Bitcoin is way bigger today, more than $1 trillion asset than it was in the past. But we could still see a price acceleration and eventually going, not only reaching this fair valuation trend line, but maybe going above it and reaching a major top for this cycle.
Awesome. We've got time, I think, maybe for one more question, and it's not unrelated to this topic. It's more around the impact of the macro environment. So maybe Lepenta, Pedro, if you could take this one, but the question is really around how the impact of events like if rates aren't raised or rates aren't lowered as expected, if there's more geopolitical stresses, tension in the world, how these types of things will impact a risk asset like Bitcoin in the wake of the halving.
Thanks, Jerry, for the toughest question to the end.
Always, yeah.
Yeah, I think we are under a very tough macro scenario to understand right now, right? The world, we're probably into our third war happening simultaneously. We got, as I mentioned, this eventually fiscal dominance affecting major economies, US, Europe, Japan, and some others. We got a bunch of issues coming out of China that we don't know if it's, with real estate problems, with banking problems, with the deceleration of growth, right? We're seeing gold after a 10 years sideways movement. Again, like picking up in prices, we're seeing it, 20% year to date price appreciation for gold. And remember, this is a $15 trillion asset class, right? So you're moving every 10%, that's a 1.5 trillion, that's one Bitcoin. Every 10% of gold, that's one Bitcoin that gets created in market cap. And so I like when I look into this scenario, and then again, and one last point is that, you know, like inflation is still not, the discussion on inflation is still not over yet. We had this huge disinflation coming from high single digits in major currencies, 9-10% sometimes, back towards 3% levels, but people were expecting it to be anchored at back to 2% levels. But that's not what's going on. You know, we're seeing an uptick, and now it's closer to 3.5%. That might require longer, higher rates. But the thing is that, you know, and this is something that's why I don't see it as very bearish if rates stay high for crypto. One, because of the adoption phase and the halving and all these. But second is because this is a true asset that is uncorrelated with everything that is happening in the fiat world. And if rates were to stay high, that compounds the fiscal dominance problem, because you're going to have to monetize interest rates on this huge amount of debt, right? US is surpassing $1 trillion every year in interest. You know, that happens in other major markets. And the more you have to pay interest on your debt, the higher the debt inventory grows. So it compounds the problem, right? And then you look at Bitcoin with all these characteristics that we're talking about, with this capped supply, with 19.8 million already issued and like a huge strong demand coming out of, you know, all the portfolios in the world. Again, taking the long-term view and seeing where we are in the adoption cycle, I think, you know, we might see, you know, some short-term volatility, and people have to put their minds into it to understand that this asset's still a little volatile. But if you look at the long-term trend, and if you look at the long-term adoption cycle and all these things that it's happening, I think there's going to be a lot more space in portfolios for digital assets, especially Bitcoin, given all this macro scenario that we're just talking about. Tough question, but I'm very worried about, you know, the level of debt in major economies, and if people were to keep interest rates high, that compounds the problem. That doesn't, you know, it might be able to slow down economic activity, bring inflation down a little bit, but on the other hand, it compounds the amount of interest that you have to pay, and eventually it doesn't solve the problem. It compounds the problem.
Yeah, that's about as good an answer to as complicated and difficult a question as they come. So it may not be the most positive note to end on, but I think it's probably a good one. And I don't know, Lucas, if oh yeah, there you go, perfect. For folks that haven't already, please feel free to follow us on Twitter at Hashdex. And the research, Lucas is sharing a QR code here. The research that we've done on the halving is now available on our website. You can get it here, and check out our Insights Hub. We've got lots of other new research, including the correlation piece that Lucas talked about earlier during the call. So thanks, Pedro. Thanks, Lucas, as always, for your insights. And thanks, everyone, for joining us. And we'll do another one of these post-halving, I think, next month, and we can explore some of these same topics. Thank you.
Our pleasure, Jerry. Thank you.